Numbers coming in from Ashok Leyland, and it seems like a good set, especially on the margin front, because the margins have seen an expansion not just on a YY basis but also on a sequential basis. 15% is what the company has clocked in. It's almost a 12.5% growth on the EBITDA as well, but believe that a lot is already in the price, because back in Q3 the company did come out with a very good outlook for the times ahead. They believe that the worst is behind for the MHCV segment. Mid-teen margin is the medium-term goal for the company. So still some time away, or still some few numbers away to reaching that goal. But 15% is what the company has clocked in. 15 to 17% is the guided range. So that is something that we'll try to get the management commentary on. So all in all, a decent set coming in from Ashok Leyland. And the stock is trading absolutely flat right now. It was experiencing a bit of a mild uptick in terms of the stock performance, but is now seen to be drifting lower. But Arpit, if I can quickly have your take on Ashok Leyland, how do you see the build up for Ashok Leyland, and how is the technical setup looking like?
Auto stocks has seen good momentum, and if you talk about particularly Ashok Leyland, on the monthly chart, if you see, it has negative formation of lower highs above 235 levels. On the daily and the weekly, some cool off is seen, but major support is seen here around 232 levels. And till the stock trades about 230 to 233 levels, the bias will be positive towards 242, 245 levels. So overall bias will be positive till it holds above 232 levels for an upside move towards 245 and then positionally 248 levels.
All right, so that's the take coming in on Ashok Leyland. The stock is turning out to be a little volatile. But Sunny, your first thoughts on Ashok Leyland numbers, because of late we have seen that the commercial vehicle players have been doing pretty well, case in point being Tata Motors as well, wherein the margins held steady for their CV segment. What is that you're penciling in for Ashok Leyland, and your first take on the numbers? A bit of a margin improvement, but overall, do you believe that the much of the positives are already in the price?
Yeah, good afternoon and thanks for having me on the show. Yeah, definitely. I think if you look at margin number, look at least optically looking slightly better than the street estimate. But ultimately, what street will look into is the growth guidance for FY26. So we believe that maybe second half of FY26 is a time where on the low base, and because of this increase in government push on capex side, we may see a very healthy recovery in terms of volumes as far as medium and heavy commercial vehicles are concerned. And at the same time, we would like to hear commentary from Ashok Leyland on bus division. So their EV bus division of late has been sitting on a very good order book. So what is the progress over there, and in terms of execution at current market price? I think most of the positives are already in the price, and overall our estimate is that over the period of next 2 years, the earnings growth can be to the tune of 12 to 13% CAGR. So kind of mid-teen kind of earning growth we can see as far as Ashok Leyland is concerned. Overall, broadly it looks like inline set of numbers, slightly better than expectation, at least on margin front.
Right. Okay, in the meantime, some important news and big comments coming in from the government sources. The government has not received any proposal to increase the defense allocation yet, but will be considering it if needed. Right now, the defense budget is sufficient, is the word coming in. Let me take it across to my colleague Prakash Priyadarshi and get in more details on the same.
The government sources are suggesting that the defense budget is sufficient to meet any requirement, and in fact there is no such proposal at this point of time to make higher allocation, but the government will consider any such proposal increasing a budget if it comes from the concerned ministry. However, Defence Acquisition Council has already provided emergency approval to make further procurement based on the Army's requirement. Along with that, when it comes to the issue related to providing further financial assistance to Pakistan by the IMF, sources are suggesting that this issue was raised with the IMF. In fact, IMF's own data shows that the arms purchase by Pakistan increased after every financial assistance provided by the IMF. And therefore, these issues were raised with the members countries as well, and the government of India is well prepared to put forward its viewpoint during FATF meeting slated for June. That's an important development coming in, that the government is planning to grill Pakistan at every forum. Along with that, when it comes to US government decision to impose tax on outward remittances, sources are indicating that, of course, there will be an impact of the US government decision, but an assessment will have to be made about the impact, and we'll have to see whether these issues could be included in the bilateral trade negotiations with the US.
All right, thanks so much, Prakash, for getting us all those details. But do hang on, as more details are pouring in. With the next GST Council meet is expected to be held soon, and decisions on the rate rationalization and compensation cess will be on the cards. Prakash, give us some more details on this one as well.
Yes, government sources are suggesting that the next GST Council meeting is going to be held very soon, in fact, by the end of June. In fact, the ministry has started working on the proposal. We're given to understand that the issues related to rate rationalization, rate simplification and compensation assess will be discussed in the next meeting. That's an important development coming in, as the GOM on rate rationalization has already submitted its report, and it is expected that the GST Council will discuss these issues in the next meeting. Along with that, when it comes to state of economy at this point of time, government sources are suggesting that there is no question about the India's growth trajectory. In fact, India's economic fundamentals are strong, and revenue growth will improve on the back of a better monsoon. That's an important development coming in on the issue of AGR dues. Sources are suggesting that the Telecom Ministry has not sent any such proposal regarding AGR dues against Vodafone Idea and Airtel.
In the meantime, JSW Steel is expected to post a good set of Q4 numbers, which is likely to be aided by lower coking coal prices and volume growth, also improved cost efficiencies. Let's take it across to Ashesha and find out what her poll is penciling in.
Well, yes, we are expecting strong set of numbers on a sequential basis for JSW Steel this time around. Revenue is expected to see an uptick of about 5% on a sequential basis, led by volume growth. So strong volume growth coupled with lower coking coal costs in the quarter gone by and operational efficiency will aid numbers for JSW Steel in the fourth quarter. EBITDA is expected to see an uptick of a solid 15% on a sequential basis, led by lower coking coal costs. Remember, iron ore prices rose a tad bit in the quarter gone by, so that could negatively impact the numbers, but all in all, strong set of numbers are expected. As far as standalone EBITDA per ton is concerned, that could come in at about 8,800 rupees per ton, which will be an uptick of a solid 12% on the sequential basis. But management commentary on outlook going forward, especially when it comes to volume growth, when it comes to pricing, will be crucial this time around. Capex and debt plans of the company will also be crucial. And remember, safeguard duty was imposed by the government at the rate of 12% on steel products in the quarter gone by. So any management commentary that comes in on safeguard duty and its impact on the steel industry will also be very crucial. But all in all, we are expecting strong set of numbers from JSW Steel. Revenue growth of 5% sequentially. Margins are expected to expand, and EBITDA per ton is expected to come in at a solid 8,800 rupees per ton, up 12% sequentially.
Sunny, just wanted to get to you, given that we're at the fag end of the earnings season, where is it that you find the positive surprises and where have been the biggest misses?
Yeah, so coming to earning, I think it was a kind of mixed bag across the sector. So within banking, again, the few of the banks have reported a good set of number. Case in point, ICICI Bank, HDFC Bank, Kotak reporting in line set of number, whereas banks like Axis Bank has slightly reported a number slightly below the analyst expectation. Cement and metals, at least both the sector, we have seen that worst of the earnings disappointment is behind us, and there is a sequential improvement, at least in terms of profitability for both these pack, aided by again the same story that input cost is coming down, and at the same time there is an uptick in realization. So both this segment, cement as well as metal, continue to report a good set of number, and again we are expecting that both this pack will continue to report a good momentum as far as earning growth is concerned during the first half of FY26. Moving on to auto, again auto was a kind of a mixed bag. So we have seen on one hand, like for Mahindra and Mahindra, or for that matter, Force Motor reporting a good set of number. On the other hand, within two-wheeler pack, TVS Motor has reported good set of number, whereas there was a disappointment from likes of Hero MotoCorp. So again, a mixed bag as far as the auto sector is concerned. Moving on to the consumption, again, within consumption, we have seen a kind of tepid volume growth as far as the consumer staple businesses are concerned. But within that, Marico stood out with a kind of 6% volume growth number. And on the consumer discretionary side, we have seen a kind of a decent set of number from jewelry pack, whereas value retail segment continue to report healthy SSSG growth. QSR, we have seen a decent growth despite of coming off from a signally strong quarter of December. Despite of that, we have seen a decent quarter as far as the March numbers are concerned. So again, what I would like to sum up is that it was a kind of mixed bag as far as the earning growth is concerned. So on if I try to classify between mid cap, small cap, and large cap, so we have seen a very good set of numbers from many mid cap and small cap companies, and there we are finding that the growth momentum may continue for next 2 years. So I think ultimately market is rewarding the companies which are reporting good set of number, especially from mid cap and small cap pack.
All right, so those are the sectors that one can be really watchful of, but just a few minutes left before we should shop, and this week has been really interesting one because we did start above that 25,000 mark for the Nifty. We are just 150 points away of that, but one way up, one day down was really the trend that we caught up, but Nifty Bank actually managed to claw back to near to those levels from where we did start this particular week. But within the financials basket, Arpit, if you can help us understand that any particular stock, especially from Bank Nifty, where do you believe that the strength can come from, even from these levels, given the fact that the Bank Nifty, at least for today, is showing a bit of a resilience and once again clawing back to the Monday's opening?
So if we see overall bank flow has been consolidating from last many sessions, but today, as rightly mentioned, it is giving a strong closing after 3 to 4 weeks. And if you look at the chart setup of Axis Bank, so Axis Bank has been trading in a range from last almost 9 sessions between 1180 to 1200 levels. But today, finally, it has managed to give a highest daily closing on the daily scale. And from here on, it is on the verge of its falling supply trend breakout above 1215 levels. So that I think from here, the risk reward is quite favorable. And from here on, we can see a movement towards 1240, 1250 levels for next couple of days to weeks time. So Axis Bank would be a preferred pick within the banking space with key support near around 1180 levels.
All right, those are the that's Axis Bank for you within the banking space. That stock is holding on to the decent gain, but metals as a pack that has been shining bright. Arpit did highlight one of those metal counters, that is Hindustan Copper. But Sunny, what's your view on the metal pack? Because I believe that it's the second straight week where the metal counters are shining bright, though JSW Steel numbers are awaited. But within the metal pack, any pocket that is looking good to you?
So within metal pack, we continue to remain constructive on non-ferrous pack. So companies like Nalco has reported a solid set of earnings with a robust growth outlook. So we find the risk reward to be favorable as far as the Nalco is concerned among the aluminium pack. Steel pack, as discussed earlier, so I think worst is behind the entire steel pack. So because of this safeguard duty, the NSR net sales realizations are likely to improve going forward, and with an benign input cost, I think at least the steel players will expand profitability as far as EBITDA per ton is concerned. So we continue to remain bullish, constructive on steel pack also. And if somebody want to ride on stainless steel side, so we feel that one can ride that story to manganese. So we feel that kind of bottoming out as far as manganese prices are concerned. So companies like Moil and Sandur Manganese, if somebody want to take a kind of high risk, high return bet, so that is something which we are bullish on.
Right, okay, gentlemen, all of you, thank you so much for your time and joining in today on the show.